Good morning, traders and investors. My name is Roger Scott, and today is Tuesday, and it's January 31st. It's the last day of the month. Do not ask me where the last month has gone. I still feel like we're getting ready for Christmas or Thanksgiving. I mean, honestly, I was just talking to my wife the other day. The warmth is going to get here in a couple of days, or a couple of weeks. I mean, it's ridiculous. But here we are. February 1st is tomorrow. And remember, February is a really short month. So we got to make sure to make extra profits during the short month span. It's 7:58 in the morning. The market's going to gear up to open up in about an hour and 32 minutes to be specific with you. We closed down yesterday, and right now it looks like we're following through just a bit. Although, I got to say, with the volatility we're seeing now, this is kind of random. I used to say anything above or below 85 or 90 points is not random. But with the volatility, with 400 points, 500 points moves a day on the Dow, 100 points really isn't all that much. But with that said, there's a good chance we will be distributing today, not accumulating today. Why? Well, look at the bond market. Let me just show you a different page here. But you could see here, we're still below the 200-day moving average, and we're bouncing lower. Now, this is not a major trend, but bonds are going down. And when bonds are going down, that puts more pressure on interest rate sensitive stocks like technology, communication, discretionary, and so forth. Aside from that little wrinkle that we have to deal with, we've got earnings today. Now, yesterday we had earnings on Whirlpool, on SoFi Technologies, NXPI, which is down quite a bit, Helmerich & Payne, Graco, the child... they make child seats for cars and so forth. But the big earnings drop today with AMD. AMD, I'm not sure if it's before the opening bell or after the opening bell, but they're expecting. I'm just checking to see where my cat is. I hear him meowing. And AMD is expected to be up 27% year over year on 14% higher revenue. So far, NXPI didn't do so well, but I'm hoping AMD can erase some of those sins. You also have a lot of other stocks reporting. I mean, the kitchen sink is being thrown at us today. Amgen, Caterpillar, Boston Properties, that's a big one. Corning, Life Science, Electronic Arts, Exxon, General Motors. You think these are big enough stocks? International Paper, Juniper, Marathon Petroleum, Match for those dating fans, McDonald's, Mandela's, Pfizer, Phillips 66. I actually now know where this company got their name. Pulte Group, Snap, UPS, Western Digital. All of that is coming out today. And then tomorrow, oh boy. Whew, you got Meta, Altria, Align, Boston Scientific, Corteva, eBay, Humana, name it, you got it. So, and then Thursday, you've got the big daddy. You've got Apple and Alphabet and all the others. So the next 3 days are going to be very volatile, and you may not see a lot of stability. To add a little more danger to the mix, why not, right? You've got interest rates going higher. You've got earnings in full swing, and then you have the FOMC announcement tomorrow. The Fed starts speaking today, which may actually curb a bit of volatility, but the FOMC announcement is coming out tomorrow at 2 p.m., and then you have the press conference. Now, remember, the reaction from the announcement versus the conference can be two different things, because Powell, he's completely in his own little world, God bless him, and he has no clue of what reality holds or what his words hold or the power of what they hold. But I'm very interested I'm not so much interested in the announcement. I'm pretty sure it's going to be about 0.25. I'm 99%, and so is the market. What I'm concerned about is forward-looking statements of what he may say or what he may forget to say. So that's the big factor that I'm looking at aside from earnings. Let's talk a little bit about global economy, and then we'll get into levels, and I'll give you the best sector, best stock, worst sector, worst stock for this week. So it's been a busy week for central bank meetings, slew of quarterly earnings report, and economic data. Yesterday, we went down, weighted by oil and gas, technology, and consumer goods. Although we went down on oil and gas futures, the stocks actually didn't do so bad. In yesterday's trading, the U.S. stock index closed lower as higher bond yields weighted on technology and other rate-sensitive mega stocks. U.S. Treasury yields gained ground ahead of the central bank meeting and a host of U.S. important economic data later this week, with the 10-year climbing for a third straight session. When they say it's climbing for a third straight session, they actually mean that the yield is climbing for a third straight session. The bonds are actually moving lower. So that means lower bonds, higher interest rates. So just so you know, there's an inverse relationship. The Federal Reserve kicks off its two-day meeting today. That's what we just discussed a minute ago, with Fed lifting rates by 0.25 basis points tomorrow. Market participants like me expect Mr. Jerome, I'm not going to be honest with you till I get reappointed, Powell to signal more rate hikes ahead and push back on expectations that they're done for a while. I'm thinking they're going to be talking more in terms of what's next and how long they're going to go. Fourth quarterly earnings results. Oh boy, McDonald's, Pfizer, ExxonMobil, AMD. I mean, look at that. I mean, just ExxonMobil, Pfizer, McDonald's, AMD, that's a huge market cap. And here's the worst part. We're now looking at 3%. Yesterday was 2.9%. We're now looking at 3% decline for the quarter when we were expecting 1.6. That's not good. That's bad. When the expectations, when the running numbers get lower as we continue, that's bad. Today, all eyes are focused on the consumer confidence data that's coming out in a couple of hours. Economists on average forecast that the January consumer confidence will stand at 109 compared to 108.3. I'd like to see a little more consumer confidence, although I'm not sure we're going to get it. Probably because a lot of consumers were thinking that interest rates are going to start going down, which is not the case. German retail sales unexpectedly fell 5.3% in December. Remember, Germany is the biggest European financial market. This is bad. That's a lot, weaker than expected. Expectation of a positive 0.2%, weighted down by higher inflation and energy crisis. They've been able to navigate pretty good this winter, though, with the natural gas supply. But this is horrible, negative 5.3% for the month. China closed lower after Chinese manufacturing and service activity rebounded. I'm going to talk about some Chinese stocks today in my VIP room. Chinese manufacturing PMI rose to 50.1 in January, returning to expansion territory for the first time since September of 2022. Now, that's something to be really excited about. At the same time, non-manufacturing PMI rebounded also. This is really, really good because remember, China is the biggest manufacturer in the world. Their manufacturing was down many orders for manufacturing was down 40% last time I checked. So this is really good. The Nikkei, after making a 1-month high yesterday, closed a little lower with better than expected retail sales. I'm really concerned about the retail sales in Germany because that can really derail Europe, and that'll put more pressure on U.S. So far this morning, Whirlpool is up over 1%, and NXP Semiconductor is down 4%. Keep an eye on semiconductors because AMD is reporting, and that's another semiconductor company. Look at all of the earnings you have reporting today. I mean, that's a huge amount of earnings. And I give them to you here, pretty much all the big ones with the expectations. If you want this sheet, just send me an email and I'll forward it to you. And you'll have all the numbers for this week in a nice, concise, summarized fashion. Looking at each individual sector. And let's first look at them by strength. Basic materials and energy are going tick for tat, right? Look at that. 12.53 versus 12.59. They're really up there. But you could see here over the last 2 quarters, actually it's kind of interesting. Energy's beating over 3 month and 1 month, where materials is beating over 3 month and 1 month, whereas energy had a huge 6-month run a while back. But basic materials looks like it's heating up right now, and I'm hoping the industrial will heat up as well. I'm not expecting a lot of love for communication services technology, and consumer discretionary is already cooling off. I'm expecting these sectors to rise. So if you want the best stock right now, I'm going to show you where I would put my money right now. In my opinion, let me just... What do I need this rating for? I don't even know how this thing got here. There we go. I don't need that. All right. So let me just take a little chart here. Now, energies are cooling off just a bit, or at least it appears that way. But consumer stocks are not. Right now, one of the best stocks is LVS, Las Vegas Sands. Look at this trend. It's doing really, really good. And another stock that I'm liking is Lamb Weston. It's got a nice little trend as well. Other stocks that are trending really well United Rental, look at that trend. But I would wait for a little pullback there. And another one is Ulta. Look at this thing. This thing has been trending like crazy. So I would stick with stocks that are showing a clear trend right now. Energies are not, but Las Vegas Sands is, Lamb Weston is, and where was that? United Rental is, although I'd wait for a little pullback. And where was that? Ulta, beauty. People want to go out. COVID is behind us. Also, Caterpillar's not looking bad. So I just gave you, 5 stocks? Caterpillar, Ulta, United Rental, and Basic Materials. United Rental, hello, is looking really good. So you have a good, and then Las Vegas Sands. Remember, going out stocks have been rallying. So that's another really good one. In terms of crappy stocks, let me give you some crappy stocks. I love giving you crappy stocks. Dish is a dish served cold. I think it's going to go down back to the $13 level. Let me find some other ones for you that are just doing awful. I think Tesla's going to come down all the way to about the 100 level in Tesla lows. So Tesla, I'm not really bullish on right now. Another stock that I'm really not bullish on right now is, hold on one second. Here, 3M. I don't think this 3M is going to do much. I think it's going to go a little lower. So you've got a couple of stocks to choose from. Another one that I'm bearish on is Meta, but that one's not coming out with earnings till tomorrow. But Meta right now is abutting the 200-day moving average. I want to show you what I'm talking about. It's right at the 200. It's right above the 200-day moving average, and I think it's going to cool off and come. Oh, that's MetLife. What am I looking at? I'm losing my mind. Meta. Here we go. That's it. It's hitting the 200-day moving average right there, and I think it's going to cool off with the rest of the market. But right now, we got to be very, very, very careful because you got earnings tomorrow. So you might want to wait a few days and then short Meta. But Meta is another stock on my short list. And if you get into my VIP room today, I'll give you some real clear short-term trends and long-term trends, both to the upside or downside. Now, folks, before I let you go, today is the day, and I mean it's the day. If you love a good deal, then I've got something you do not want to miss. Today, Tuesday, 1 p.m. Eastern Time, I'm going to share something really, really exciting for the first time ever. It's a world, this is a world special, world premiere, world uncover. We're uncovering a pricing mismatch in the market, taking advantage of what it means even in a tiny 1% move in a stock that could lead to option gains as high as 31, 41, 46%, even more in a matter of days. Now, once you learn how to use this pricing mismatch to your advantage, you will never, ever, ever, ever look at the market the same way again. And you're going to learn what volatility means, what it does to stocks. There's so much actionable trading information that you can apply into your life here that I can't even begin to tell you. You are in for a major, major surprise. You do not want to miss this event. It's happening today with me. It'll be about an hour to 90 minutes. I'm going to answer all questions. You guys are going to love it. You got to check out Bargain Hunters. This pricing mismatch is definitely something you want to include in your trading toolbox in 2023. Click the link below. Register now. If you're on YouTube, go to the YouTube Wealth Press channel. This class today is going to be hot. I've been waiting for it for months. I cannot wait to show you what I've got in store for you in the next couple of months. Check it out. These Bargain Hunters is your ticket to success, in my opinion. Follow the link below. You're going to love it. Don't have to worry about earnings. Don't have to worry about implied volatility. It's so much fun. You're going to love it. Bargain Hunters, 1 p.m. today, Tuesday, 1 p.m. Eastern Time, not Pacific, not Central Eastern Time. If you're liking or loving these videos, post your comment in the YouTube channel. I'll respond. Let's have a discussion there. It's good because everybody will be able to participate. I'll talk to you guys later and have an amazing, amazing Tuesday. And I'll see you at 1 p.m. Eastern Time, today, Tuesday, for Bargain Hunters. It's going to be an amazing world premiere. Bye, guys. Have an amazing Tuesday. I know I will.